like a very scary kind of a start. 1% here, half a percent there, 2-3% here or there. It's par of a course for any market at any stage. The breadth is bad. It was expected to be bad. The breadth is meaningfully bad in all pockets right now. First, I want to mark the heavyweights: Reliance, SBI, ICICI Bank, Infosys, just to establish that has the selling really snowballed into some reality. Now, you're talking about money moving into China. Well, guys, China is shut. So either money is going to move into cash or money will stay in India, and they will only go back to China after the recent run-up when markets opened next week. So for the day, I think Reliance is off balance. Kotak Mahindra Bank is also off balance. We are seeing what really could be called as a global alignment for Indian markets. Small cap, mid cap, across the board. I won't use the word sea of red, but there's definitely an element of edginess which clearly is there. Dabur numbers are not great in terms of the update, and the stock is reacting immediately. Are we in that market where market may just ignore good news and overreact to bad news? Maybe yes, because the levels are such. Angel One is one stock where the reaction was expected to be negative after the new FMCG changes. BSE, not a very sizable cut, so to speak, and that is very interesting that markets perhaps knew this was coming because these were recommendations which were done in the public domain and they've been changed. JSW Steel, thank you Morgan Stanley, that's what everybody would say, because it's off to another 2% and that makes it 1040 and the only spot of green which I can see on the screen so far.
Oh yeah, absolutely. Given that Morgan Stanley has maintained its overweight target price now at 1150 for JSW Steel and an 80% probability that the share price is going to increase in the next 30 days alone. I think, calling it that close, it's definitely auguring well for JSW Steel right now. KPIT Technologies as well. There's a JP Morgan upgrade to overweight from the current neutral target price of 2,000 rupees. So look out for what that stock as well does. Dabur, like Nikunj flagged off, definitely soured sentiment there. Weakest quarter in about 4 years. Heavy rains, floods impacted their numbers. 7.25% down for Dabur, no less. I quickly want to see whether it's rubbing off on the other FMCG majors or not. What with the likes of Marico, Unilever, Godrej Consumer Products. Marico, on the other hand, is holding up by about 2%. Unilever is down 2% right now. But I think, and Godrej Consumer as well, lower by about 2%. So I think the biggest fall, of course, is on Dabur, which is now down over 7% as we speak right now. There's Godrej Properties as well. Investec is upgraded it to a buy, put a target price of 4,200. Ashoka Buildcon, which received that 1,700 crore rupee plus order from MMRDA, that stock is holding up about almost 3% in trade. Yesterday was a trading off, but you had Eicher Motors, Hero MotoCorp all come out with their monthly sales numbers. For September, Royal Enfield sales have definitely come in above estimates. It's an uptick of 11% on a year-on-year basis. Eicher Motors and Hero MotoCorp, of course, the September sales there as well have been higher. It's an roughly 19% uptick year-on-year basis, and exports have shot up about 22% nearly. For NMDC as well, the September production has come in higher by 1.3%, sales an uptick of roughly 14% year-on-year. There's DRL as well, which has signed a voluntary licensing agreement with Gilead Sciences for commercialization of one of the drugs. So look out for that as well. By the way, Marico as well, the second quarter consolidated revenue growth remained in high single digits, and rural demand is actually outperformed urban. So quite a stark commentary coming in from Dabur on one end and Marico on the other, which is why you're seeing such a polarized move on the stock prices as well. For the Nifty, it's just a 1% downtake, and I say just 1% because losses happened from when we called off for the trading off yesterday on Tuesday afternoon. From there, it's a 1% downtake. Kunal, very stable, I would say, given the global dynamics.
Yeah, and I think we're still holding on to that 25,500 mark for the index spot levels. So I think that should be taken as a positive sign for the indices. In terms of the opening trade, EBFRL is something which started to look attractive. That's a chart which over the last few days has managed to hold up about the 340-50 mark. So it suggests to buy EBFRL.
By the way, I want to check in on what Maruti as well is up to before I take it across to Naresh, because the total September passenger vehicle sales saw a downtick of about 3% over there, while the total sales were higher by 1.9%. Maruti currently lower by 1.6% as we speak. For Coal India as well, the September coal production, that's seen a downtick of about 1%. The offtake also is lower by roughly about 1.5% or so. And OMCs and paint companies, given the sharp spike up now that you're seeing in crude, and the fact that Brent is back 4% higher at that $75 per barrel level after not being after being at $70 per barrel not too long back, that as well is seeing a bit of a sentimental rub off. But Naresh, what stocks are you punching in trades for?
So a country like Kotak Bank has closer to 1850 odd levels. The stock has corrected well from 1940, retesting the previous breakout points. A good risk reward here, low beta stock. So like the stock as such.
All right.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.